big market shifts are happening, and what does it mean for homeowners? Do you sell or hold? The latest numbers will give you some clues. Hi, Michael Chu with 7M Realty in Fremont, Silicon Valley. Please like, comment, share, and subscribe to my channel, and we will be sure to bring you up to the minute and useful information to help you become an informed buyer or seller in the shifting market. If you pay attention to the news recently, you will know the stock market is crashing. And by driving up to the gas pump, you know we have high inflation, right? I will go over some highlights of that later, but let's take a look at the housing market and assess what it means for homeowners. So caveat on all the real estate data is usually it takes 30 to 60 days to take into account of the sales cycle from buyer offer being accepted to go through the closing process, and typically it takes anywhere between 15 to 45 days, depending on the terms. So data being collected and reported. As we're in the third week of May, we're actually getting the April data, which were homes sold in, let's say, March or earlier. So this is especially critical since the dramatic increase in mortgage rate isn't really fully accounted for in the numbers. From that standpoint, data from the next 2 or 3 months will see the full impact of the rate increase. So onto the April data. The Bay Area continues to see price increase, overbidding, and days on market reflect extremely intense demand. April sales also reflect buyers who locked in mortgage rates before the big rate hike in late March, and buyers were highly motivated to buy before their rates lock expired, adding short-term pressure to demand. Mortgage rate went up by 69% since the beginning of 2022, and the scale and speed of that increase makes it difficult to predict precise effect. And inflation now is at 40-year high. On the financial market side, S&P is down 20%, Nasdaq about 28%, and Dow is down 14% from the high earlier this year. And this week, May 20th, this is a week of continuous down stock market. So anyway, if this content is helpful to you, please comment below and let us know how we are doing, or if there are any other real estate questions or topics you'd like to address. And like, share, and subscribe. Now let's look at some headlines. The housing market is beginning to show preliminary but not universal reactions. Accounts of less crowded open houses, fewer multiple offers, on new listings are becoming more common. Some buyers are dropping out or taking a break or becoming more choosy, and some sellers are moving listing dates up forward. When hot market shift cooler, you'll typically see the first effect in reduction in multiple offers and in overbiddings and the number of homes going into contract, and a number of active listings and days on market and slowdowns of year-to-year appreciation rate. And over the last few weeks, we have gotten reports from our agents all over the country regarding fewer or no multiple offers from Seattle to Las Vegas to Arizona. In fact, most of the agents we talk to have referred to less buyers who are out there continuing the home search process. The full effect of the higher interest rate and the financial downturn and the lower consumer sentiment will be seen in the May and June reports. All right, starting the housing part. So first thing I kind of wanted to bring up in Silicon Valley is that there's a report of Netflix laying off 150 employees and dozens of contractors. So this relates to that consumer sentiment, and really it's going to weigh down on willingness to purchase. Indeed, this is another report from Bloomberg, And it says U.S. previously owned home sales fall to the lowest since June of 2020. The car report also shows the same conclusion. Pending home sales are at the lowest in 2 years for all price points. So if we can look at some of these charts, these are pending sales shrunk from last year at price segments for the first time in 2 years. Now, so this one here shows active listing increased this high for the first time since January 2019. So active listings, as we know, we all talked about inventory being dried up and there's nothing to buy. And indeed, when you look at this time frame is 2019, and ever since then, it's been on a decline. And starting in 2020, this area is what we've seen in the last couple of years. The market really didn't have any inventory to work with. But so in these 3 months, it jumped, and in March, in fact, it's 23.6% above. So it is coming up, and the inventory reached the highest level for April since 2020. Again, this is the trend chart for the inventory level is coming down. But as you can see, starting in 2022, inventory level is starting to buck the trend and start to rise up. And if we have the full number for the month of April and May, I'm sure it will be taken up a little bit more, because I personally see more listings coming out on the market in the last 2-3 weeks. So active listing continue to rise as the market approaches the spring home buying season. Over here, this year, 2022, March, April timeframe, if we look over March, April timeframe, we're slightly higher, but perhaps this trend may continue. If there's less buyers out there. So there are only two things that causes higher level inventory. One is that there's less buyer, and then of course, second thing is there's more active listings coming on. So this is showing that active listing is coming on, and the market condition actually is holding back more buyers coming out in the market. So with those two, supply and demand changing, this is new active listings exceeds sales for the second time in 3 months. This is the blue is new active, so new listings coming on, not as high as the sales side. So we're always like short of inventory. And this year we started to match, and in some cases exceeded slightly on the new active inventory side compared to sales. So this is where the start of the reverse of the trend coming in. Also, this shows a reduced price listing. So there's 22% of the listings reduced price, and the median reduction in that amount is about 5%. So why is it significant? I mean, last year, all year, we've seen very few reduced price listing, and everything was sold at above the listing price. So this year, obviously, some of them are going reduction. So again, things are changing, shifting. So this is really the theme of this episode, is to bring out the fact that things are shifting, and we shall be prepared to act accordingly. Now, this one is coming into Alameda County in our local area. These are the price segments and active listings in those segments. So, April timeframe, this is in between 500 to 1,000. So let's call about 800 here. And so what you can notice is that this particular price segment between 500 to 749, it's on a trajectory to reduce. And so it's been coming down in the last 2-3 years, maybe even 4 years. The increase in here, though, is this green section, and the green section is in between 1 to 1.99 million. One way you can look at this is that the median price of a single family home in Fremont actually went up to like $1.8 million in April. So, it could be that a lot of them used to be in this segment in the 750 to, below 1 mil level, but now they belong in this segment. So this segment actually increased quite a bit. But the point is, if you look at this mid-year May type of situation, and you look at May situation here, it is obvious that we have more active listings coming on market. We look through all these headlines in the macro and also in the financial markets and see how it could impact just in general, perhaps, but also particularly in the South Bay, in the Bay Area, like Netflix is laying people off, and Facebook and other companies are now having the hiring freeze. So let's hope that it doesn't go into negative territory. But nonetheless, I think a shift is a shift, and it's affecting many things. And it's not just the stock market anymore. They are all interconnected. They will impact the housing market at some point. It may take some time, but just be aware. And we want you to be the informed home buyer, homeowner, or seller. So, if you like the analysis and research we have done here, please like, comment, share, or subscribe to our channel, and we will be sure to bring you useful content like this. So, what does this all mean for you as a homeowner? Are we telling to you to sell at this point? Are we suggesting to hold? Well, actually, it's neither. We want you to be an informed homeowner and empower you with tools to protect your equity if you decide to hold, and also help you reap the highest net possible if you're thinking of selling within the next 2 to 5 years. That sounds pretty good, right? Well, that is a goal to utilize our real estate experience and market research to help you make the best decision. We will be doing homeowner seminars in the near future, and I invite you to comment below if you're interested, and we will send the Zoom meeting invitation to you when we put together the agenda. Content will apply to any homeowners who have enjoyed high appreciation of their home value during the last years and are wondering how to preserve that equity in a downshift economy. So this is particularly applicable to homeowners in the Bay Area, but also any other states and regions that had seen double digits appreciation in the last year. Until we meet again, let's make it a great day. Just did on a dealer 2 lot there, guys. A dealer 2 lot. $1,000 on a 2 lot. Look, dealer's 2 lot. $1,000 on a 2 lot. On a 2 lot. Boom. Look at that, guys. Crazy, right? Dealer 2 lot back into the half back trade. Just